With that, let's move ahead. The second half of FY25 will be very strong. That's the word coming in from Metro Brands CFO, Kaushal Parekh. Despite a year of muted consumer demand, the company remains quite optimistic on the way ahead. In an exclusive conversation with our colleague Shilpa Ranipeta on the sidelines of the RAI Retail CFO Summit, he added that the company has big plans for the sports and athleisure segment. Take a look.
As we guided in our earnings call, we have seen overall customer sentiment sort of, coming back. In fact, for us, even in Q1, products above 3,000 rupees, which we classify as premium, we saw the percentage of that increasing from 49% to 54%. So that undercurrent in terms of customer shopping behavior is there. We strongly feel H2 would be very strong for this financial year, and that's how for the year as a whole, we should hit that 12 to 15% overall sales CAGR.
I think casualization was the biggest trend that came out of COVID as well. So currently, is that Metro's main focus, and brands like Fila, are they going to be the growth drivers? And if you could sort of maybe give me a figure or put some number to it as to how big do you see these brands being, say maybe by the end of FY25?
See, if you see our overall brand portfolio, we have like 7 brands now: Metro, Mochi, Walkway. These are our own brands. Then we have tie-ups with international companies like Crocs and FitFlop, and both these brands have been doing exceptionally well. Our latest acquisition was Fila, that was in 23, and then we tied up with Foot Locker, which is a multi-brand sports and athleisure outlet. So these are the recent ones. Obviously, our endeavor would be to make sure that all our existing format grow, and we see a huge amount of growth opportunity across all our brand formats. So obviously, that is something that we would not want to let go by. So that is something that we would be completely focusing on. As I said, sports and athleisure, we feel is going to be a huge market going forward from here on. You touched upon casualization, right? 10 years back, Metro was broadly a black and brown formal company, and today casual plus sports contributes to more than 60% of whatever we sell. Right. So obviously we always follow what customer wants, and that is where we sort of migrate to. So we'll keep working on all our format and keep growing them. And sports and athleisure is something which we want to set it right for the kind of opportunity that we see going forward. So to answer your question, obviously sports and athleisure, both Fila, Foot Locker will start growing from H2 and FY26 onwards, but along with that, other formats would also grow. Right. So for this formats to become substantial, it would take some amount of time, because we expect all our formats to grow significantly. Right. From here on.
Last question with respect to store expansion. Generally, retailers, we saw in the last couple of quarters, given the slowdown, there was a lot of store rationalization that was happening. It always happens, I agree, but then more than usual given the slowdown. And while there is store expansion, the pace of expansion has slowed down. Is Metro looking at store expansion that way, or are you going to continue to go aggressive? And given your focus on the value format also, will most of that happen in tier 2, tier 3 markets?
Whenever we sign a store, we sign it for long term, right? It's not for 1 quarter or a year. It is predominantly for 7 to 9 years to sort of come. So we are very cautious whenever we see euphoria in the market. We have been existing since more than 65 years now. So whenever there is euphoria in the market, we would slow down, because you can't sign deals which will come and bite you maybe 2 years down the line, because these are long-term tenure leases. At the same time, when there is overall pessimism in the market, Metro would be most aggressive among the lot. So that has been our philosophy over the years. Having said that, we opened 15 stores in Q1. We have guided for 225 stores over next 2 financial years, excluding any new stores that we open for Fila. We feel extremely comfortable and confident of achieving that numbers. For this financial year, our target would be to touch or exceed 100 stores, and as I said, right, 225 for next 2 financial years. So logically, for next year, we would target somewhere around 125 stores.
Yeah. And what about for Fila? What's the store plan there?
Fila, we had clearly defined our strategy, because when you take when you do any acquisition, you have to work over cleansing and getting the integration done properly, right? So as we had defined, FY24 was the year of liquidation. Right. FY25 was the year when we want to reset the brand in India, and we plan to predominantly do that by placing Fila within our MBOs and eventually Foot Locker, which we hope to come in H2 of this financial year. Once we start seeing green shoots in terms of customer accepting our merchandise at the price at which it is offered, we would think of opening exclusive brand outlet for Fila, which most probably should happen in FY26.
Interesting one. Well,